Boom. All right, what's up, you guys? It's Royce Jacob. Welcome back to the channel. In this video, we are going to be talking about how and why the markets are being torn to shreds at the moment. Now, most investors will perceive this as a negative, which obviously to the majority, this is negative, but it can be flipped positive in the case that you are properly equipped with hedges and put options or short positions going into the downside, which I hope most of you were, considering around these parts, we have been expecting this downside price action for quite a while now. All right, so once again, hope you're properly armed with those put options, with those hedges. But in the case that you weren't and you think more volatility and more downside is on the horizon, like I am, I will be going over a very simple way to play this continued perceived volatility moving forward, because once again, I do not think the storm is over just yet. All right, so go over that. We, of course, have to talk macros. We'll be reading over the intro to my newsletter where I cover a lot of the macro fundamentals at play right now and really what's beneath the surface, not just charting. The charting is very important as well, but what I want to focus on today is the monster beneath the surface that is the true catalyst behind a lot of the downside and fear that we're seeing across the equity markets. And in a little more breaking news, fashion, I guess, I do want to touch on Alphabet's earnings. They just reported, they just missed as we expected them to, and this is a great example of a massive American company, one of the largest companies, both public or private, obviously, in the entire world, one of the pinnacles of, the American economy, and the fact that Alphabet, Google, YouTube is lacking and giving a very bearish outlook should definitely reflect on the rest of the markets as well, which I do believe it will. Okay, so that's pretty much the breakdown of the video. It's going to be pretty simple. Once again, I want to spend, pretty much spending all of our time today talking about the fundamentals at play right now. So let's do that. We'll dive into this. But before we do, like the video, subscribe to the channel if you're not already. I know bear markets aren't as fun, but this is where you learn the most. This is where you build the most character as a trader. If you want to be around for a while, you have to be able to take the winners. You have to be able to get cold, build some callous, take the slaps. And these times are honestly more important, especially looking back to cover, than the good times. Everyone can make money in a bull market, you guys. It's easy to make money in a bull market. It's not easy, and it takes guts, it takes balls, or don't want to discriminate, but you guys get what I'm saying. Shout out to all the lady traders out there if there's any watching. But you guys, it takes guts to trade a bear market. It takes skill to make money in a bear market, and that's hopefully what that's the purpose of making these videos. And again, it just builds character. Even if you want to hold, even if you want those diamond hands and practice just holding and taking shots for the long term, that's great too, because that's also a very important skill. Patience pays off, and that is very relevant. If you can stay rational, if you can stay cool, if you can keep your eyes on the prize on the long-term time horizon in the wake of short-term volatility, that's also a very important skill. So that's a little PSA aside. Let's read this. It's Tuesday. You're probably watching this on Wednesday, but it was Tuesday. And it's the day we've been waiting for, team. The markets are melting across the board. I'm feeling bummed for all the bulls out there, but I'm also feeling extreme validation for correctly playing this bearish macro trend. Raising interest rates and hyperinflation, along with a dramatically slowing economy coming out of a market full of liquidity injections and manic capital, create for a pretty obvious read when it comes to the bigger picture. So, again, you guys, everything that I just blurted out right here, these are all of the macro points. These are the macro points that we've been talking about for the past couple of months now. And again, the Fed is raising interest rates. The primary reason the markets skyrocketed over the course of 2020 and 2021 is because the Fed was injecting liquidity, okay? And that those liquidity injections, that helicopter money, those stimmy checks, the unemployment checks created for a manic environment, okay? And now, don't fight the Fed worked on the way up. That was applicable on the way up. It's equally as applicable on the way back down. And right now, the Fed is coming in guns blazing on top of a slowing economy and on top of poor earnings calls. Again, you guys, this is a scary environment. Tesla, obviously, we'll address that a little later. Tesla down over 12% today, down even more in after-hours trading at the time of recording. I'm obviously gonna say I told you so. I don't want to rub it in any way, but again, you guys, Tesla is just such a good example of what happens when manic capital enters, again, a cultish stock, just a stock that has gone beyond its a stock that is climbed beyond the point of a reason is the hardest to get hit once reality starts setting back in, right? So that's very important to remember as well. And that's why Tesla is down 12% today in the SPY and NASDAQ, while still down staggering 3 and 4%, which is crazy for ETFs of those scale. I mean, you can just see again, Tesla is a great sign of what happens when an overran stock, when a manically traded stock actually faces a rough economy. Okay, so although that wasn't eloquently said, that's why I read from this, you guys. Okay, so as a trader, my job isn't to be nice, although I'm a massive proponent of being nice. At the end of the day, my job as a trader is to have my money make me money. Although most investors are losing capital on this bloody Tuesday, we were well equipped with puts or short positions, and I'm happy to say that we're all in the green today, while the majority see red. Although it doesn't feel as fun, it feels especially validating, especially considering so many were doubtful of this bearish stance. Go look at my Tesla video. Everyone's talking shit, right? So that's the reality, you guys. Zig when they zag. We'll get to that. If you happen to hop on board with these short positions with me, then cheers to you. It's not easy to take the path less traveled, but when you do, and when you're right, the rewards can be especially lucrative. Zig when they zag, or in other words, who is this? Who is the Oracle of Omaha? I should have said what's Warren Buffett's nickname, so I just scuffed that one. But Oracle of Omaha, be fearful when the markets get greedy, and be greedy when the markets get fearful. Words of the wise right there. I mean, Buffett, during like 2021, when retail madness had set in, when the GameStop frenzy was happening, there were so many Wall Street bats, little retail Joes talking trash about the great Mr. Warren Buffett, and he's old, but hey, I mean, right now we're seeing when push comes to shove, when things get real dirty, when again the mania fades, Warren Buffett, if you look at Berkshire, you look at Warren Buffett's personal holdings, I mean, he's been crushing it over the past look at Coca-Cola, that's a perfect example. Coca-Cola has been crushing it while growth stocks get absolutely punished. So again, you guys, he's been here for a long time. Take notes from the wise, words of the wise. This market is even more fearful and unforgiving now than it has been as of late. And when fear consumes the markets, it takes time for those storm clouds to fade. In my opinion, the storm is far from over. Tesla down over 12% today, which is staggering for a company worth $1 trillion. That's $100 billion plus of value destroyed in a single day. Obviously, with Tesla seeing hyper volatility, my put contracts are up over 200% on the day. So again, you guys, remember, team, this is important. Options contracts don't necessarily thrive off of present volatility. They thrive off of expected volatility or implied volatility. Today, we have both, and that's why these contracts 3x'd in a single day. So keep that in mind, you guys. When we see price action like this, that's also why I took profits today on some of my put options. I do still have further downside price targets ahead. I do still have most of my positions in play, but I did take profits today. And again, you guys, those Tesla puts are up over 200% today. That's a 3x in a single day, and that's what happens when you go against the grain and do things that, again, people might criticize you for, and that's why it's important. Just if you have a macro thesis, if you are grounded, if you have conviction around your beliefs, then stick to those beliefs and play them out. Even if you're wrong, that's all right. If you have a good argument, which I mean, I make these YouTube videos. I argue pretty much for a living for my side. I debate for a living. You can almost, I mean, not literally, but you can almost argue that in a sense. I know my argument. I know the stance I'm taking, and I'm standing strong. And today that was a very that literally paid off. Okay, so SPY puts performing beautifully as well. Downside price targets in scope. So again, it'd be foolish to not take profits. And then went on to talk trades, you guys. But again, you guys, there's always a bull market somewhere, even if that bull market is shorting a bull market. So if you guys do want to know exactly what put options I have in place right now, if you guys want to get specific, if you guys want to know what puts I have in place, if you guys want to know when I'm buying the dips, if I'm buying the dip on Riot, if I'm buying the dip on Render, Coinbase, Vuzix, Matterport, I mean, hint, maybe I did that today. Check out my complete portfolio daily newsletter. First link down in the description box below. $15 a month, $40 for every 3 months. Today, I mean, if you stuck to the portfolio today, I never advise anyone copy me, because that can prove very, very not lucrative at times. But again, you guys, the game of trading is just learning from your mistakes, learning from your from your wins and from your losses, and I hope you guys can do that for me. But again, if you guys agree with my reasoning and rationale around my place, I don't blame you for hopping on board. In the case that you did today, I mean, that would have paid a single position would have paid for the entire year or two of this. So again, you guys, that's the first link down below. $40, $15 a month, or $40 for every 3 months. Do yourself a favor, go check it out if you're not subscribed already. To my existing subscribers, I love you guys, it means the world. And yeah, that's definitely where I put in the majority of my work on a day-to-day basis, and the majority, that's what really makes me excited, especially on days like today. Obviously making a shitload of money, seeing the net worth go up is very validating as well. But what makes me really happy is those of you who again agree with my sentiment, agree with my takes, and I know you guys are eating good as well. So that's that, you guys. A little long plug, but also a little bit of reality as a trader scattered in there as well. We read through this guy. Let's take a look at Alphabet's earnings, and then we'll close it out. I'll briefly talk to you guys about closing thoughts on the market in general, and VIXI, which is the ProShares Trust VIX Short-Term Futures ETF, which is a very simple way. I mean, you don't need to buy put options. Super simple. You can just buy shares of VIXY, and as you can see here, VIXI was up 10.5% today, as the S&P 500, or the SPY, was down 3%. Okay, so let's take a look at Alphabet's numbers real quick. Key points: Alphabet missed on top and bottom lines for the first quarter. YouTube showed particularly weak results. I just mentioned that a couple of videos ago, if you guys remember that, where I talked about, I'm a YouTuber. I see these metrics. I see the analytics. I see the ad revenue. I know that their ad rev was going to be light. I knew that ad revenue is declining at a rapid pace. And obviously, again, PayPal, Facebook, Netflix, these are all precursors of what is to come in these earnings. And that's why, Google, that's why it's not surprising at all that Google delivered disappointing earnings, and it's pretty likely to me that Apple and Amazon will as well. Microsoft is really whipsawing in after hours. Just before it was down like 5%. Now it's up like 4% or something. So we'll see what happens there. But again, you guys, the point is people are running out of money. And that's just the reality of it, right? You guys, when people run out of money, when people have less capital to deploy, consumer output is going to slow. Okay, now that there's less capital out there, now that there's less US dollars in demand, and actually when we look at the Dixie, we'll look at the Dixie real quick, just on the fly. Dixie is reaching a level of my freaking life. It didn't suck so bad. So, if this ever loads, Dixie is pretty much reaching the high that it did in, Dixie just touched it. Dixie has seen one of the highest level it has since the pandemic levels, okay? During the liquidity crisis of March 2020, when everything sold off. When things sell off, obviously, the sell-off, if you're selling equity, if you're selling crypto, that crypto is going to be converted into the global reserve currency, which is still the US dollar or the Dixie, okay? And right now, that's why the Dixie everything is selling off. The Dixie is performing so well. And there's inflation at play. Inflation, obviously, gas is more expensive. Just cost of day-to-day goods like grocery, eating at home is more expensive. Eating out is way more expensive. Eating at home is still significantly more expensive as well. Gas is more expensive. Again, the cost of living is becoming more expensive. And when people are running out of capital, when people actually need money to spend on their lives, on their livelihood, on their well-being, on their families, they're not going to have capital to spend on Amazon or just recreational goods like they have from the helicopter money that was deployed by the Fed over the past couple of years. And that's the primary, just very, very simple, very obvious, just base layer for what's been my bear argument for months now. And again, push comes to shove, there's no free lunches. Right now, the markets are finally catching up. If you guys do think the markets are going to fall, the S&P 500 specifically, because VIXI is pretty much is directly inversely correlated to the S&P. So the S&P 500 goes down, VIXI goes up. If you guys think the S&P 500 is going to go down, you can buy some VIXI. Or again, if you want to know exactly how I'm shorting Tesla, how I freaking 3x'd a pretty significant position today, that's going to be the first link down below. And I'm excited to see what the next few days hold as well. Okay, so we'll call it there, you guys. Again, it sucks. Bear markets suck, but there's always a bull market somewhere, and thankfully the Waves fam has found that bull market, and the Waves fam is eating good while the majority are not eating good, right? So always thankful for that, you guys. I'm thankful for you guys watching, and thankful for you riding with me. Until next time, also let me know in the comments down below what you think of the markets. Are you somehow bullish? If so, why? Or are you bearish and were you loaded up on puts? Because if so, cheers to that, you guys. Eating good tonight. Taco Tuesday. Gonna go drink some Ronas and lime. Maybe shot a Casamigos. And yeah, we'll call that a day, you guys. Love you guys. I'll talk to you soon. Until then, always remember, take action. Make waves. Peace.